Hello, my name is Mary Ann Vlahak, and I'm a faculty member of Housatonic's Business Department. One of the courses that I'm very happy to provide to everyone is on personal finance, and April is Financial Literacy Month. So greetings to our April panel discussion with the financial experts from Patriot Bank, a partner of Housatonic for the past 6 years. We're fortunate to receive funding for Patriot Bank scholarships that support our high-achieving, low-income students at Housatonic. And Patriot Bank goes beyond their grant-making support by providing their knowledge, expertise, and time as our financial literacy partners on campus. Last year, we created a financial literacy website. Housatonic and Patriot Bank both are co-sponsors, and it is used by hundreds of students every semester. Our campus additionally has a Patriot Bank Express Banking in a Lafayette Hall that does not charge service fees for our students. And we've hosted panels just like this one in the past with Patriot Bank leaders on a variety of financial topics of interest to our students. Just to let you know that the questions you're going to see today were provided by Housatonic students covering 4 major life areas about setting goals, daily financial needs, credit, and what's beyond savings. Our first set of questions today concerns goals. I will be asking the question, and for each question, the answers for this section will be provided by Fred Stadmeyer, who is the EVP and Chief Administration Officer of Patriot Bank, and he'll give you his expert advice. So for the first question, I'm going to be the role of student. Should I have financial goals if I have no expenses and still live at home?
Thank you very much, Marianne. Great question. Let me start by saying that everyone needs goals in their life. Goals are necessary to guide our daily lives, whether that be personal goals, family goals, educational goals. You can't create a roadmap unless you know where you're going. So today we're going to talk about financial goals. Financial goals, like other goals, should be written down and supported by a budget. Very important. Your roadmap to meeting your financial goals is to have a carefully thought out budget and following it. Financial goals should be using the construct of SMART goals. Financial goals, like all goals, should be SMART goals, meaning that they're specific, measurable, achievable, relevant, and time-based. As an example, it's great to have a goal of saving money, but that leaves too much up in the air. Instead, we really need to try narrowing in on what you really want to accomplish. So everyone really needs goals. If you live at home, in this example, in this question, was a very good question, I would ask, do you want to continue living at home forever? I'm guessing not. So what would be your first step toward living independence? Perhaps that would be getting an apartment with a roommate or two, and determining what you can afford. And even if you determine to stay at home for some significant period of time, I'm sure you'd have financial goals in terms of transportation, education, vacations, or whatever. So, getting an apartment might be a good start, but that will involve a security deposit, monthly rent, utilities, food, all need to be in that budget. But I would highly recommend that everyone should have financial goals.
Thank you. Another student asked, how should I decide how much to save or spend based on how much I work and earn?
Well, that's a question I think all of us deal with constantly in our lives. There are a couple of easy slogans that people use, but they're powerful cliches. One is always live below your means. The second one is always be saving, no matter how small the amount. And while those are hard to do sometimes, we each need to understand, what our needs are, not just what we want, but where we can go and do we really need a car? What kinds of things would be important to have in our lives? And just making sure that the budget, I'd go back to my budget example, making sure that whatever you're planning to spend fits into your budget. And that you're sticking with that consistently will allow you to have that have some money to spend. But you should be saving, always saving, even if it's a small amount.
Okay. Also, how much should I have in an emergency fund? I really don't have a lot of extra money each month to save.
Well, I think it's great to concentrate on that issue of emergency fund. As we read in the papers, most Americans do not have, many Americans, I should say, many do not have any reasonable emergency fund, and even a small bump in the road, such as a car, your car needing to be fixed, or a family member needing some help, can really be a stress. And so, my suggestion with regard to emergency fund is start small. A goal could be $1,000 in an emergency savings account that you build up over the next 6 months. That would only be $167 a month of savings. Or if that doesn't fit into your budget, take 12 months to create it. But the first step to financial stability is to have an emergency fund. You really shouldn't be saving for cars or homes or vacations until you have that emergency fund. And ideally, growing the emergency fund to enough to pay your personal expenses for 3 months is a great start. As you progress in life, maybe more than 3 months would be your goal, but that would be a great start.
Okay. How can I start saving for a house, and how much should I pay for a house based on my income?
Okay, well, saving for a house is a challenge, and but it is not only most people's biggest asset, most important asset, but it's also what is there for them in retirement. For a lot of people, having a home is a critical piece of a retirement planning scenario. So I would encourage everyone to start carefully. For example, one of the things many people are doing today are buying a 2-family house or a multi-family house. Don't shoot. My recommendation is don't shoot for that final house of your dreams at first. Earn up to the house you want for you and your family, and be careful planning, such as perhaps buying a multi-family house would be a good start. How to save? The best way to save is through auto deductions from your income or from your paycheck or your checking account into your savings account. Automatic deductions a house today is going to be typically 10 or 20% of the home value is needed for a down payment, and so it's a substantial investment. But starting early and doing it on a consistent automatic basis is the best way to save for a house.
Thank you.
Oh, and let me also add, let me also add, Marianne, that I think people should recognize you probably don't want to ever get into a monthly mortgage payment that's more than a third of your income. So just use that as a general guideline.
Okay. Thank you. And as I get older, will my financial goals change?
Yes. I think our goals, like everything in life, change as we grow. Initially it's an emergency fund, as we talked about, I hope, saving for a car, saving for an apartment or a home, saving for your children's education, and all the while saving for retirement, a little more, and then a little more than that. My recommendation is to always be saving for your retirement, even if it's a small amount, whether that's a 401k through your employer or an individual IRA, but constantly putting something aside for retirement while you're saving for other issues. Let me go back to the home purchase. Remember that a home is your best retirement savings. Having a home is whether you use that to sell and then have equity to spend, whether you do a reverse mortgage as you get older. I know for a lot of young people, retirement seems like something that is so far off that it hardly seems it'll ever happen. But trust me, it does come. And I think it's very, very important to morph your financial goals to where you are in life. Remember that if you start budgeting early and stay with it, you can move from financially dependent to financially stable to financially secure, and maybe even someday to financially independent later in life. So planning, budgeting, the discipline of consistency, asking smart people for advice on these subjects as you go along. These are all pretty important pieces to financial planning.
Well, thank you. Our second set of questions that we're going to be going into that students had given to me concern our daily financial needs. Our presenter, our expert, is Christopher Johnson. He is the Senior Vice President and Director of Branch Banking at Patriot Bank. So I'll start with the first student question. What types of checking accounts should I use if I don't have a lot of money?
Great question, Marianne, and thank you for the opportunity to address the questions, and hopefully everyone will benefit from the information that we're providing. On that topic, we hear that from current customers, and we hear it from new customers coming in, that they want to make sure they're in the right product for their situation. The best thing to look at are the options presented no matter where you go. There will be options for student checking. As long as you have your student ID and it's still valid, there are many banks, especially Patriot, that offer a no minimum balance, no monthly maintenance charge account for students. And again, that's something to check as you're talking to any bank. But so student-based checking accounts don't require a lot of money. Another option would be exploring a e-banking or digital-based banking product. And those checking accounts reward customers who are using the electronic and digital channels like bill pay, debit cards, rather than writing paper checks to pay their monthly expenses. Those accounts are usually also free, so far as no minimum balance and no monthly maintenance charge. And the final, for those of you who are working and have a paycheck that can be direct deposited, exploring any account that is offered without maintenance fee or minimum balance if direct deposit is received are a great product to pursue as well. So those are the three that I would recommend: either a student-based account, a e-banking based account, or any account that offers the free monthly maintenance fees with accepting direct deposit.
Thank you. What are advantages of having a bank-based checking account versus using payment apps?
Well, I think this one is kind of skewed toward banking, so I appreciate that. I would be happy to talk about the advantages of having a bank account versus a payment app, but I do realize there are pros and cons to each. But what I would say the major benefit and advantage of dealing with a bank-based account is that you get people to answer any questions you may have, whether it be people in a branch as you open the account or visit to do your transactions, or our banking center, which performs two functions. It answers, those folks answer our 1-800 number when you call with questions, but also when you're at our interactive teller machine, which at Housatonic is in Lafayette Hall, as Marianne had mentioned earlier, you can tap the screen and automatically one of our live bankers who are based in Stamford will show up on the screen and are there to answer your questions as well. So the major advantage of having a bank-based account as opposed to using payment apps is the personal touch. Again, understanding that if you are savvy and understand everything about the banking app that you're using to pay, then that suits your needs. But again, anyone who needs some personal advice, more high touch than high tech, bank-based accounts are definitely the way to go.
Okay. How do I include others in my family for money talks?
That's a great question, and one that evolves as your needs change. Basically, family members should be aware of what your goals are and what your budget is as you have income coming in and expenses. To go back to what Fred was saying, everyone should have a budget and everyone should have goals. And if you're saving for, let's say, a car, and that car is going to require insurance, and you may or may not be independent, and you may be on your parents' policy. Part of the talk would be, I have a goal of getting a car. I'm saving. I plan to get a loan. I may need a co-signer. Would one of you, parents or another family member, be willing and able to be a co-signer for me? Another part of those talks is all about helping. And would you be able to help me with the down payment? Or could you help me understand what the increase in insurance would be if this car is then added to our family policy, or if it makes sense to have my own policy, knowing that there are sometimes added expenses of having your own insurance policy. So again, that's outside of banking, but involving your family in money talks is specifically to show the benefit to you and them of discussing the details in further, so that no one has any surprises and that you've got a sound financial footing to either, again, buying that car, renting an apartment, going on vacation, whatever the plans may be. Discussing it first and then setting forth a plan and involving those that have a stake in it is the best way to go. So I would always say involve your family in your money talks and do so on an open basis.
And is it better to use a debit card or a credit card for everyday purchases?
That's going to be on the preference of the user. From a mechanics point of view, again, relating back to budgeting and watching your expenses and your income, if you use a debit card, those transactions can only be approved if you have the funds in your account. And then when you get your monthly statement, you will then see all the deposits that were made for your income, and then see the debit card purchases come out of your account for your everyday expenses. And then you can see if you are remaining within the plan that you've set forth, or if you're dipping into some extra money to pay for some of these everyday expenses that you would prefer to be saving. Credit cards, they offer rewards, usually a couple of percent cash back depending on where that purchase is made. But the biggest thing to remember, debit card versus credit card, is if you do use a credit card, be sure that you can pay that bill at the end of the month when it arrives, so that you're not incurring interest expense, which then dips into your everyday cash that you'd like to use for your typical purchases and expenses. So those would be my pros and cons. I would say using a debit card as often as possible. And one exception, again, knowing you can make that payment at the end of the month, is any online purchases. Because when you use a credit card, if there's an issue, you can dispute it and you haven't paid the bill yet. So you haven't lost any of your own cash on this possible fraud. Whereas if you use a debit card and make a purchase, and then there's an issue with that purchase, the funds have left your account, and then you need to request reimbursement from the merchant that you were dealing with. So I would say those are the two biggest issues. Making sure you can pay your credit card bill if you use it every day. And on the debit card side, knowing if there was any possible fraud, your account will have that money taken out of it until that dispute is resolved.
Okay, thank you. As we are talking about credit, another set of questions that students submitted were about credit. Our presenter is Patrick Trombley, who is the Senior Vice President, Head of Commercial and Industrial Banking at Patriot Bank. And a student question is having debt a bad thing?
Hi. Intuitively, one might think that debt is a bad thing, but obviously it's not. It helps you acquire assets that need some time to pay off. There are certain other benefits, for example, cards that provide a discount or provide points. So it's really all a question of It's better stated that mismanaging debt is a bad thing. Debt, when appropriately managed, and in the right amounts, is a good thing.
Okay. Why is credit so important if I'm not planning on buying a house?
Sure. Maintaining good credit score can have many implications beyond buying a house. There are other assets that you might want to buy, like a car. Um, if you ever go for a business loan, you want to start a business, you want to buy an investment property, your credit score will be very important there. When you want to rent, most landlords um, will you know will ask for your credit report, and they examine your credit to see whether you'll pay the rent, just like a mortgage company will examine your credit to see whether you'll pay the mortgage. Um, your credit score can impact your insurance rates for certain types of insurance. There are many many implications of having good versus bad credit. Depending on what state and what kind of job you're applying for, your employer may want to look at your credit. So it's a factor in more aspects of your life than you may think intuitively.
Okay. And what does a bank look for when somebody wants to apply for a loan?
Sure. Great question. Part of that will depend on what kind of loan. For example, if you're looking to acquire commercial property, we see that a lot in my department. We're looking at the property, the income from the property, the value, but we're also no matter what kind of loan you're applying for, we're looking for credit history. We're looking for both capacity and willingness to repay. Um, you know, so do you have the cash flow? Do you have the liquidity? Do you have assets? But then also, what's your repayment history? There are plenty of people who generate a lot of cash flow but don't pay their bills on time. Or just they're messy with their accounts. They fall behind. Those are major factors, no matter what kind of loan um, you're seeking, and those are largely within people's control. Just stay on top of your credit, stay on top of your bills, make sure they're paid.
Okay. Thank you. And our last set of questions goes beyond savings. Our presenter is Al Boda, who is the Senior Vice President, Director of Prepaid and Mobile Payments. First question that students are interested in is why investing in digital currencies like Bitcoin has become so popular.
Well, again, thank you, Marianne, for having us, and I'm sure I speak for all of us that we appreciate the opportunity and hopefully will be helpful to your students. This is a great question. And I mean, one of the obvious and first answers that people talk about when they talk about Bitcoin and digital currencies, and it's going to sound like a strange answer, but it's new and it's trendy. It's a shiny object in the corner that everybody wants. But the main reason that people get involved in Bitcoin and why it's become so popular is because it's easy and it's real time, and there's less involvement from other people, whether that's a service you're using, as an example, a bank or the government being involved. It's become very easy to get involved with buying and selling currencies like this, like a Bitcoin as an example. The market for currency for coins is 24/7, 365, and it's almost real time. So you could essentially set up an account very quickly online and make a purchase and sell it, within minutes, and collect your money and have your increase and be done. And that's one of the main differences between buying currencies like a Bitcoin and investing in the stock market and other types of investments. It's also very easy. If you've gotten into digital banking and you know how online banking works, and you're using an app even from your basic your bank like a Patriot and have a checking account, it's very easy to move funds these days. So buying via another app is very easy for people today. It's not dependent on banks. It's not dependent on government entities. Is another reason that people are highly motivated to get into the crypto space. And then the last thing I'll say is that because of something called blockchain, which is the language and the database that all these trades run on, the risk of fraud is much, much lower. Every transaction that you run is encrypted, so you're able to secure and keep your personal information private. I think those are a couple of reasons why it's become very popular.
Okay, and what are some pros and cons when investing in digital currencies versus, say, the stock market?
Sure, it's another good question, and there's probably lots of answers. So I'll try and keep to a minimum 5 or 6 or 7 comparisons. I mean, the stock market's been around for a long time, and it's completely regulated, which there's lots to say about that. I mean, it's not private. There's a lot of your information goes to a lot of different places, and everyone has a touch on your data. I mean, you're paying taxes on your stock purchases and sales, so everyone knows what you're doing. On the flip side, when you're buying crypto, it's not regulated yet, but it still isn't regulated, and people do have more control, and it's entirely private. We talked about goals earlier in terms of savings and investing. I think it used to be that when you invested in the stock market, you were almost viewed as aggressive and willing to take risks and chances in buying stock instead of putting your money in a savings account. But now comparing that to investing in crypto, the stock market, I think, has longer term goals and is a little safer for people to make investments. And crypto is a short term. You have a better chance for immediate gain. You can see that happen immediately. You do have the flip side of that, which is you have a chance to lose money much faster as well. So it's a high reward, high risk space versus the market. Speaking about that, you also have, because it's regulated and with the market, there's data on all these companies that you're investing in, and they're forced to do that, whether it's quarterly reports or annual reports or other rules that companies have to follow. So the data and information is available, and you can make choices on companies or industries that you want to invest in based on actual data, actual information that's available to you. When in most cases with cryptocurrencies, the information is not there. And most times you're not really sure what you're even investing in. Again, because it's not regulated. There's also diversification in the stock market. I mentioned that a few seconds ago, but there's lots of different types of companies and industries that you can invest in with your portfolio and spread your money around. Whereas in the crypto space, although there are 10,000 plus different types of coins today, the market in the crypto space tends to go up and down together as a whole. There's really no diversification as to what people are buying and what they're selling. The market today, not as volatile. I mean, stock market is, like I said, maybe 10, 15, 20 years, 30 years ago would have been viewed as more aggressive and risky. But today, the crypto space, the trades are happening 24 hours a day, and any piece of news could change how the entire market, how the pricing runs on any of the currencies could be at any given moment. There's no looking at financials on companies to see how a business is doing, or a strategic plan on a cryptocurrency business, how they're doing and what their plan is, and if they're meeting their goals. That really doesn't exist. The last thing I'll say is that when you buy stock, you actually own a piece of the business, and you can actually track that through and through from the time that you did some research on a company and saw what they were selling, what they were producing, or what service they were offering, compare it to your strategic plans and see if they're meeting their goals through revenue numbers, et cetera. And with cryptocurrency, you just don't know who the companies are at this point. Again, there's no rules in place to tell anybody that this is what this company represents and what they're doing. I mean, most are familiar with what Bitcoin is to a point, that it was one of the first, if not the first coin that was available. And the goal there was to create an alternative to cash. But there are, like I said, 10,000 different currencies in the crypto space out there. And I'm sure we can't really define what the other 9,999, what their purposes are specifically. So again, it's owning a piece of a company or something that's real versus not really sure what you're getting in your purchase of a currency makes it a little bit high risk in this comparison.
Okay, well, I want to say to our panel, thank you. We covered questions about goal setting, your daily financial needs, credit, and going beyond savings. Again, thank you to the panel. Thank you for being a listener for today's webinar. I just want to remind everyone, Patriot Bank has branches in Connecticut. The most convenient for a lot of us would be the Express Banking in Lafayette Hall. And if you have any questions that you would like follow up on, feel free to reach out to me. Again, I am Mary Ann Vlahak. You can email me at mvlahac@hcc.comnet.edu. Thank you and enjoy Financial Literacy Month.